So the first one here is a small question, but someone was asking what the difference is between day trading buying power and stock buying power when they take a look at the details of their broker at the back end of TradersPost.
Yeah, good question. So specifically, what we try to do with brokers that offer multiple asset classes is separate any of the specific buying power that might be relevant to stocks from the rest of the account. Occasionally, there might be an account type that allows both options trading and stock trading in the same account. So the stock buying power could be separate from the options buying power, in which case you can sort of reference the stock buying power depending on what you're actually trading. So the overall day trading amount there, that's the obvious important factor here. That's the amount of available capital you should have in that account, regardless if you're trading stocks or options. And that usually is the sum, or is usually the same amount with most brokers, but occasionally it can be different. So I would refer to those amounts depending on what you're actually trading, stocks or options.
And when I was taking a look at this, and I don't know exactly right because I've never actually hit this limit here, but I was looking online and they were saying that there's a certain amount of trading that someone can do for intraday, and that's different than just the entire positions on their account, the portfolio value on their account. So I didn't know if this would affect that as well. Like if someone um, they could trade a certain amount of volume in a given day before hitting pattern day trading regulations rules. I wasn't
Yeah, I
sure what the
feel like we're
details were there.
touching on two different topics there. One is the pattern day trading rule, in which case in the instance where you have a margin account, you have to have $25,000 or more in the account in order to trade in and out of a position in the same day before funds have settled. It's a little complex. You should look it up, check with your broker on these rules, and confirm whether you're under a restriction around pattern day trading. Many brokers will actually label it out for you. I think Robinhood even has a little useful tool that actually shows you the number of day trades you've taken, and if you hit the limit, then they lock your account. The alternative to this, of course, is just to have a cash account. Cash accounts aren't subjected to the pattern day trading rules, so you don't have to worry about meeting that requirement, but you don't have access to margin as a result. The intraday amount that you're allowed to use usually has more to do with futures, where the amount of margin requirement is lower for contracts intraday than it is for overnight. So if I wanted to trade like NQ, for example, I only need a couple $1,000s of initial margin in order to trade during the day. But at the end of the session for overnight, I have to liquidate that position. Otherwise, I need to have at least $18,000 in my account in order to cover that position. So that might be in reference to what you're talking about there. I'm not sure if there's intraday rules for stocks and broker accounts. That's a good question. I would need to look that up.
Half my conversations are with AI, and I always have to expect that maybe they're not telling me the truth. They're like, "This sounds good." I send it off to Tom.
Yeah, my favorite thing about AI is it will basically answer the way you want it to. You have to ask it like, what do I have wrong about this in order for it to come back with the accurate information sometimes.